Hi, I'm Kevin Thielen, the host of Life, Money, Adventure. Today is the second episode of our three-part series titled Impact Investing. We're continuing our journey up the American River Bike Trail. I'm now off of mile marker 8, standing on the Guy West Bridge, a portal to Sacramento State. In our last episode, we discussed economic, social, and governance investment criteria, or ESG. It's an approach to impact investing that not only allows us to influence social progress, but comply with modern portfolio theory. In this episode, I'll discuss 4 investment principles that, if followed, have a track record of providing successful investment outcomes. In our third and final episode, I will teach you how to comply with these principles. So for now, I encourage you to stay underwhelmed. You do not need to be an expert to be a great impact investor. It's unfortunate so many investors fail to understand themselves, their financial goals, the risks in their investment strategy, and how all that plays together to serve their interests. You see, there's this interplay between what you want your money to do for you, what it's actually doing, and how you feel about it all. If you don't get that right, you're bound to make decisions from the heart, and great investors make decisions from the mind. Now, stay underwhelmed here. You don't need to be an expert. You just have to know this interplay exists, and you gotta figure it out if you want to be a successful investor. You know the rule. Do not put all your eggs in one basket. The idea behind a diversified investment strategy is to have holdings from hundreds, if not thousands of companies from around the world. ESG criteria is broad and inclusive, so you can comply with the principle of diversification. The way it works is corporations with a higher rating receive more investment dollars, to where corporations with a lower rating receive less or no investment dollars. Stay underwhelmed here. You don't need to be an expert on diversification. You just need to know it's important in your portfolio. The cost of investing can be high and difficult to understand. Impact investing, even using an ESG approach, can create even higher costs. The bottom line, higher costs translate to lower return on your investment. You should understand all fees prior to investing, including transaction fees, custodial fees, asset management fees, and investment product fees. Stay underwhelmed here. You don't need to be an expert. You now know these fees exist, and that can be empowering. Have a plan and stick to it. Your investment strategy should not suddenly change because you think there's a better way out there. I suggest you find a reasonable and repeatable investment discipline that you're willing to see through. Stay underwhelmed here. You don't need to be an expert. You just need to understand you need to have a plan. In the face of being self-promoting, I must disclose I provide financial planning and investment advice for a monthly fee, so I have a bias in this conversation. That said, I would consider 3 questions. Do I feel comfortable that I can align my personality, investment goals, and investment strategy to serve my interests? Am I confident I can build a well-diversified, risk-appropriate portfolio while managing costs appropriately? And do I believe I can implement a repeatable investment discipline? If you answered yes to all these questions, it's not likely you need a professional's help. If you answer no, it's a bit of a different story. Be honest with yourself. Am I gonna be an impact investor without a professional? If you want to learn more about these investing principles, I suggest you take to the Google and type Vanguard's Principles for Investing Success PDF. It's a resource I find very helpful. In the next episode, I'll help you identify professional help. The focus will be on low-cost, high-quality investment solutions delivered through a digital experience. Love your life. Be you.